Everyone is focused on how high silver could go in 2026. That's the easy question. The harder question is how many pullbacks you'll survive before the move really gets going. Because next year won't reward excitement. It will reward patience, and it will test it early. If you're holding silver going into 2026, the most important thing isn't the top. It's surviving the pullbacks on the way there. Because 2026 will not be a straight line higher. There will be sharp rallies, there will be violent pullbacks, and there will be moments where silver looks broken. That does not mean the silver story failed. That is how real bull markets behave. Let's get something clear right away. Silver is not moving because of hype. It's moving because pressure has been building underneath the global financial system for years. And that pressure is starting to surface. But how it surfaces matters more than where silver ultimately trades. Two mistakes ruin most people during major silver moves. The first is chasing price. The second is panicking during corrections. 2026 will test both. So instead of predicting a single outcome, this silver forecast is built around 3 possible paths, not predictions, ways this can unfold. Scenario 1, the base case. This is the most likely path. Silver continues higher over time, but not smoothly. Pullbacks of 15, 20, even 30% occur along the way. These moves feel violent. They feel wrong. They convince people the move is over, but the underlying trend remains intact. In this scenario, silver frustrates as many people as possible before rewarding patience. Scenario 2, the repricing case. This is the scenario everyone talks about, but few are prepared for. This move is not driven by supply shortages alone. It's driven by stress. Stress in government bonds, stress in currencies, stress in confidence. When that stress accelerates, silver does not grind higher. It reprices. Fast moves, sharp corrections, emotionally exhausting volatility. This scenario is exciting and dangerous because it punishes emotional decisions. Scenario 3, the delay case. This is the scenario people least expect. A temporary dollar resurgence, a liquidity event, forced selling elsewhere in markets. Silver pulls back harder and stays compressed longer. The case for silver does not break. The timeline shifts. This is where weak hands exit, right before the next advance begins. Now here is the most important part of this forecast. The one factor that matters more than any price target. Confidence. Watch the bond market. Watch currencies. Watch how central banks respond to stress. Silver does not lead these events. It reacts to them, and it reacts violently when confidence breaks. That is why focusing on a single number, 100, 150, 200, misses the point. The real challenge in 2026 is not calling the top. It's recognizing when the visible price stops reflecting the pressure building underneath the market. This is silver forecast, not about excitement, not about predictions, but about understanding what's really driving the move, so you don't get shaken out of something you waited years for. 2026 will reward patience, it will punish emotion, and it will confuse almost everyone at least once. If you can navigate the pullbacks, the destination takes care of itself. That's how we're thinking about silver going into the new year. And that's what we'll continue tracking, week by week, as the story unfolds.